Usual pieces here. Earnings season is kicked off, and TCS, of course, has reported the third quarter numbers largely in line with expectations, but the commentary is sounding a little better. What is the market in the street making of it? Nigel, you put this together.
Well, when in doubt, turn to TCS. And that's been the one that batted for the bulls, particularly on Friday's trading session. And Rima puts it perfectly, right, the way she summarized this. I'm just taking some of those points that she had put up. First of all, TCS did well because getting into the numbers, the stock ended at the low point of the day. So that was additional reason, that technical factor that plays out, the shorts got squeezed out. And that's why, in fact, we did see a big bounce up on the stock. Now, why did the bulls like these numbers? First, if you look at it in the last 1 year, pull up all the top IT companies, it's a relative underperformer. So it's making up some of that underperformance. Point number one. Point number two is, traditionally, TCS always trades at a premium in comparison to Infosys. But because of this recent underperformance, now Infosys as well as TCS, they were trading at similar valuations. So that's why, the market wants to give it that benefit of that valuation premium. And that's why, in fact, we did see a bit of a catch-up as well. Next, the revenue, yes, it was a bit of a miss. However, it was largely in line with expectations and no big disappointment out there. And the biggest positive for the numbers was, in fact, the deal wins. If you look at it on a quarter-to-quarter basis, the deal wins were up by close to 19%. On a year-on-year basis, it was up close to 26%. And that was the biggest positive in these numbers, along with the commentary. So let's tell you something, some part of what the management said. They said the discretionary spends, gradual signs are there of it coming back. The coming fiscal will be much better than the last fiscal. And they said sentiment as well is improving. So put that together, the market's like that. Brokerages, CLSA is arguing that point. Valuation-wise, well, there is some support out there. And in FY26, we're going to see an EPS growth of close to around 14%, which compares with around 9 to around 10% that we have seen. While we have HSBC, they're saying that, yes, the things could be bottoming out, but they're still a little bit cautious on the stock. TCS was the stock of Friday, and thank God for it. Otherwise, we would have ended much lower, and it pulled up the entire tech pack as well.